right, let's go ahead and we're going to start now on page 48 and 49. We're going to look at transaction entry today. And I kind of use a cycle-based approach because anybody who's ever, I taught accounting information systems for a while. And you look at things from a cycle, the sales cycle, the purchasing cycle, the payroll cycle, which we won't go through, and then we wrap it all up with the general ledger. So we're going to start with the sales cycle, and that's where this chapter starts. I've opened up the sample service-based business. So when you go home, you can open up these businesses, the sample companies that come with the software, and test things out in there and see how it interacts. And we're going to look at, on page 49, managing our customer accounts, recording sales and credits for when people return things, collecting our balances, how we go about monitoring our receivables, reporting on our sales activities. So let's look at the very first thing, which is recording a sales transaction. Now again, I've toggled my software to QuickBooks Pro. If you use any edition higher than that, you will get sales orders with it. All right? Sales orders are kind of like purchase orders. It's where someone calls in and they place the order, but you haven't really shipped it or anything. It doesn't come with QuickBooks Pro. So again, look at our little flow chart here. And I'm going to go to Create Invoices. And that's what you see on page 51. I've given you a screen capture of the window. Remember, we always know what window we're in because it's on the title bar. And I've kind of explained the fields in the window. You'll notice that once I pick a customer here, and I think the one I picked here is what, Adams? Yes. You will see, if you have an earlier edition of QuickBooks, something before 2012, you won't see this window. But this window will give you a snapshot of transactions on this customer's account. You also, which is kind of nice, can see if there's been payments made, what their credit limit is, what their balance is. So it's kind of nice. If you don't want that window, you just use that little caret symbol to collapse it. Again, when you're entering the data, you can drag the columns to different sizes if you want to see what's going on a little bit differently. Of course, you can drag the edge of the windows. I'm not very good at this, to make the window larger. Under the templates, right here, you can choose what this invoice to this customer is going to look like. Here we've got the template that comes with the software, which is the Intuit product invoice. Notice the fields that are on there. We have quantity, item code, because you're selling inventory. If you're just doing services, you could go to the Intuit service invoice and notice how the template changed. It now says item quantity. It says rate here. And we did away with the other fields up here. Watch, product invoice has PO, terms. All right. You can customize these templates under, I believe it's under list or edit, but you can customize what you want if you don't like the invoices that are here. You can also toggle back and forth between these templates. So, Adam's Candy Shop could get this type of invoice for this transaction and get a different looking invoice for another transaction. So it's to this transaction that template's applied. Yes?
Can you go through like flip art or something like that on your logo?
Yes, you can. When you customize these, you can. All right? It's actually, you would be customizing not this template, but the actual invoice itself. All right? But you can do that. Of course, Intuit will want you to sell you little ones to print on, right? All right, so step 3 says we look at the customer job field, and this is what I've already selected, a customer from my customers listing. You can also add on the fly. While you're in this window, you can enter a new customer. You can do it by selecting add new, or you can just start typing a name. Hit enter and it'll come up to ask you. So let's say I just start, for example, I'll start typing something, Jim Smith. And I'll hit tab and it's going to say, do you want to quick add or to set up? I recommend setting up when it's your customer, because otherwise you're not going to get to enter all the other stuff you need to enter, like the terms, the address, all that other information. All right, the date. We'll move to the date field next. Very, very, very important that you always watch that date. It will tend to, I'm in the sample database, so they force it to go to future years. But if you are, doing this in the real world, it's going to default to the date on your computer. And then the next one you do, it'll keep the same date. That date is important because that's how it's going to age your invoices. If something's due by a certain date, and then you want it due in 30 days, that's how it's going to age from the date on that invoice. Also, if you're offering anybody discount terms for their payments, it's going to do it from that date and the date you're entering the payment. So it's real important to do that. On the invoice number, these will automatically increment, so you don't have to do anything with it. Notice we have the bill to and the ship to address, which happen to be the same on this customer. You can change that if you have more than one shipping address. I don't know if you have customers that have different shipping addresses. All of this information came from the customer account. You can change it in this transaction without it going back to the customer account. It'll be just on this transaction. Purchase order number, we're going to talk about purchase orders when you issue them, when we look at the expenditure cycle or the purchasing cycle. But it's nice if someone gives you a purchase order, because under the Uniform Commercial Code, that's a legal document. All right, so if they give you a purchase order that's signed, that's one side of the contract. You then fulfill the order and they have to pay. All right, unless there's something wrong with the goods. But that's how the Uniform Commercial Code works in commercial transactions. So if your customer has purchase order system, you should try to get that purchase order. Anytime you have a purchase order, anytime a customer will issue a purchase order, it really goes to the legal aspects of the transaction. So if they don't pay you, you've got a binding contract here. The terms, again, these came from the customer account. This is what's set up on this customer. You can change those for this particular transaction. You'll remember on the customer account last night, we saw that rep. This is if you have sales reps, you want to pay them commissions. Maybe you assign a rep to a specific customer or a rep to a specific transaction. The ship date defaulted to the date there. You can change that. Now we go to the quantity. I always hate the way that they do this. To me, it's backwards. I would do the item first, then the quantity, but they do it this way. You can if you go into the form and change it around. But to me, the default, why would you make it that way? It's just not logical to me. If you go customize this template, then you can switch those around. No, the template, you're actually going to go customize the template. Then you can do it. You're going to save it to your name, to your form. They won't let you overwrite the forms that come with it. All right, so page 52 talks about the line items section. And that's where I actually am now. I am in the actual line items for this transaction. So let's say in my example, I entered 10 irrigation hose. Now this is why I say it's nice to make sure that you set up your inventory items in a way that you would be typing them. So if you use SKUs, if you use part numbers, whatever it is that you're accustomed to identifying that with, because it will jump, if you can type, it will jump to that section just as you start typing it. You don't necessarily have to use that lookup. Because I've seen people have a lot of inventory items, and it takes a long time to scroll through all those. So if you set it up in a way that you would normally know in your head how to type it in there, then it's going to pop up to that section. So here I picked irrigation hose 1/2 inch vinyl, so right there. And of course, the price each came over from that inventory item. The amount just simply takes the quantity times the price each. Now let's look at all these tax fields on here. Remember I said last night we were going to look at all these tax fields. Let's see, there are what, 1, 2, 3 of them. First, we have the tax on the line item. Maybe a line item is not taxable. You're in the service business and you're in the construction business. Certain things in the construction business are not sales taxable because they're part of the real estate. If they're part of the real estate, they're already being taxed as the real estate. And that's why they're not sales taxable. But repair services are. So you could have something going to a customer that some of the items are taxable and some are not. So this says if this customer is taxable, because you may be doing this for a church. If this customer is taxable, then there is tax on this line item. That's what this is saying. And what is that tax rate for the customer? That's right here. It can be changed on this invoice. Remember I said last night in the customer account, you'll assign your customer to their default sales tax area. But you may have those instances where you have to change the sales tax that you're collecting on this transaction. This says this customer is taxable. Right now, we have 10 cents in tax. If the customer becomes non-taxable, and notice I changed it so they're saying, do you want me to take this back to the customer account? All right. Notice that this is not, there's no tax, even though it turned this item non-taxable. You could make this taxable. Again, not functioning the way it should be. There should be no tax on here. Gee, QuickBooks, you're working really well. Huh? It probably didn't like it because I had the customers taxable and I changed it in this instance. Yeah.
So if you're selling to a company that's in Texas, but the facility that you're shipping it to and you're using it is in Ohio, which sales tax do you?
Ohio. Well, wait a minute. You're doing the actual servicing of it?
Yeah.
You're actually doing something to it, making it or whatever it is that you're doing, then the work is done here, right? But you're selling it to a Texas person. So therefore, you don't have to collect that sales tax from that Texas person. If you have a independent contractor or an employee or a distribution center in Texas, then you have to collect Texas. All right? Because they're going to get you. Did you understand it? It's kind of like, used to you could just say, I'm not going to collect it at all because it's not in this state. But with the litigation that's going on with eBay and Amazon and all these places, they're saying we can get nexus with you if you have distribution here. All right? You took the stuff there with your company truck. Like you take something to Pennsylvania in your company truck, you better be collecting sales tax. Because they're going to say you came over here, you did things over here. But if you use a common carrier to send it over there, You have no nexus. They can't get you. You don't have a distribution. You have no independent contractor. You have no employee. They cannot get you. But they can get you if you have any of those things. A lot of times people will say, I'm just selling music on the internet, or I have somebody who's selling books on the internet. Well, if you're in Ohio and you're selling to Ohio-based people, you got to collect, because that is a media that is taxed. But if they're buying it, it's a digital download, and they're buying it in other places, you don't have to collect it. And that's to be updated. Because states are looking at the uniform sales tax code, everybody adopting, getting into like a national, we all follow the same rules. And if they do, then they're expecting everybody to comply and just collect the sales tax. The problem with, I think most people would say, I collect the sales tax, but what you make me go through to know what your sales tax rate is, to know who to pay it to, when to pay it, this one wants it monthly, this one wants it quarterly, it's too burdensome. Because really the business isn't paying the sales tax. Exactly. And it's a lot of money if you want to pay somebody to do it. All right, so that is completing line items on an invoice if you're selling merchandise. Page 53 gives you an example if you're just doing services. It's really pretty much the same. But remember, when I save this invoice, it's going to record several transactions. It's going to post it behind the keys. It's always nice to know what goes on behind the keys. It's going to record an amount to accounts receivable. It's going to record an amount to sales. It's going to record an amount to sales tax liability. It's also going to decrease your inventory and increase your cost of goods sold. All those things went on behind the scene when just posting this. That's why I always say, if you need to correct something, don't use a journal entry. Always correct it the way you put it in. If you put it in as an invoice, correct it that way. Because that's the first thing, that's how you get out of balance. You ever run an accounts receivable report, look at the balance in the accounts receivable and it doesn't match? Those things need to match. You run the accounts payable and look at the balance in the accounts payable, they got to match. It's because you didn't correct it the way you put it in. There's a lot of things that posted behind the keys when you save this invoice. So if you enter, yes?
Sorry, you're saying to make any corrections on that form, and it will correct everything by itself.
And I have some, when we get in here, we're going to look at correcting transactions. Because I always think it's important, if I show you how to record transactions, I also need to show you how to fix them. Because that's going to be the biggest thing that gets you. You're like, oh, I know how to put this in. Oh, now I screwed it up. How do I fix it? And that's where everything gets messed up when people try to fix things and they don't fix them the right way. Anything can be fixed. It's just you got to use the right steps to fix it. Now, let's say you're going along and you're going to enter a bunch of invoices and you want to print or email them all at once. Then you need to make sure this option, right, is selected. Because then you can go and print or email as a batch. See how it's a batch?
So print letter and email letter?
If you're just going to, it's later. I know it's hard to see. That's all right. It's hard to see for me. Print or email. I just have them both marked. You may only print them or you may email them. But what QuickBooks does is when you go to batch, it's going to look through the invoices that are in there, and every one of them that has that marked, it'll print them all at once or email them all at once. And then it'll turn off that trigger for that invoice.
So in the customer account, where you put the email, so when it'll batch the customer with the email it to the right place.
Mm-hmm.
Is that what you're saying?
Yes. If you put the email address in the customer account, then it's going to email this invoice using that email address. And it'll put a little form letter on there.
One time.
Yep.
I love
Did you have a question in the back? Yeah, you can. You know, you can actually interface. See where it says ship via, and here's where it's, you know, airborne, UPS. You're still, I don't know that it's sophisticated enough to bring those charges in. You may still have to input them. All right, so we're done with this. Anybody have a question? I haven't used the online pay. My clients probably wouldn't use it. But it's a way where your customers could pay you online. It would send them information and they could pay you.
PayPal or?
It'll go to Intuit stuff. You always have to think it's Intuit. Intuit stuff. Because Intuit is about selling services. All right? Yes.
Let's say that you just wanna, that was a mistake, that whole thing was a mistake. It seems like once it's an invoice, I can't get rid of it, but.
Yeah, you
I
can.
get rid of it?
Yeah, you can get rid of it. Now, it depends on whether this invoice is paid or not paid. If it's paid, you got to remove the payment first. Then you can change or void or delete the invoice. When you're in it, all right, let's say I'm going to save this. See these little scroll buttons? If I go like that, I don't want to email this, so let's do that. When I go to scroll, do you want to save this? Do you want to have this appear next time and say no? All right, so there we've done it. This customer actually has credits that I could apply to this invoice. I'm not going to. But now I've opened up a new invoice. Do you see that? So if I want to go back to the invoice I had, that's the one I just did. No payment's been applied to it. So I can go to edit, and I can say void this invoice. I can actually say right there, delete this invoice, or up under edit, or I could change this invoice and reprint it. Because no payment's been applied to it. Uh-huh.
If you have an invoice number, can you, instead of, like, let's say you did this one day and then the next day you come back and you've already entered like 15 invoices, you don't want to use the scroll back.
Now, where do you go? Do you remember from last night? Remember I said how we find transactions? In the customer center. Remember the customer center? In the customer center, you can look for invoices. You could sort by the day. See that? Sort by the number, sort by the customer. Any one of these I can double click and reopen. It'll tell you if it's open or if it's paid. I know this one's paid because there's no open balance. So if I need to fix this transaction, I got to remove that payment before I can fix this transaction. All right? And again, how would I find the payment? Right there. Receive payment. So find the payment, open it up, void it or delete it, then go back, get the invoice, and you're allowed to edit it at that point. All right? That's why I say always fix it the way you put it in. And think about the steps it's in. I think you should void, to be honest with you. Simply if the, huh? Well, not only that, remember that little audit trail? Yeah. If you void something, that's one thing. The IRS probably doesn't like things deleted.
What happens if you delete it? Will it show the deletion in the audit trail?
It'll show you deleted a transaction. Shows everything you do in here. All right. So remember with, yes.
Okay, this sounds silly maybe, but you said that behind the keys, that if you do anything here, it's got
It's hitting a lot of general ledger accounts
Well, so then why would your books not balance?
because people make a mistake on an invoice and they go in and make a journal entry. I've seen it.
To fix that
Yeah.
one mistake?
Yeah, but it didn't fix it, right? Because the customer's still messed up. You can't fix a customer account with a journal entry.
You can fix the journal, you're not fixing the all.
You're fixing the general journal so it's in balance. You're taking it out of receivables. You take, but what's all the other things? Inventory's still messed up
Right.
because you didn't get the inventory back in there, and the customer account's messed up. I know it sounds funny, but people do think that. They think they can make a journal entry to fix something, and you can't.
So you fix it?
You fix it where you did it. Yeah. So first thing I'll do if somebody's out of balance, first thing I do if I look at somebody's books, I look to see if they're in balance. All right, and I can't tell you how many times they're not. So then I know you already got issues. So then I start looking down the transactions in that account. And if I see general journal, I know where your problem is. All right, I can already pinpoint where you got an issue. You try to fix a problem with a general journal entry. And that's why you're out of balance. All right, yes?
If someone wants a proposal, Scott, how much is it gonna be? Can I use that?
That's where the sales order works. Sales orders are for proposals, but you could use estimate. You could use, QuickBooks Pro does have estimates. It doesn't have sales orders, but it has estimates. You may not have it turned on. You got to go under preferences and make sure it's turned on. Look how he knows. I already know. I'm already stepping ahead of you.
So under QuickBooks Pro preferences that has Zell,
You have estimates. You can have estimates. You can't have sales orders because that's in the higher versions. To me, it's not worth the extra money for what you're doing. Because I think QuickBooks Pro is like $160 or something like that. And then you start getting the other ones that are like double that price.
I just looked at QuickBooks Online, you can get it for like.
I hate QuickBooks Online.
$12,
I hate it. I have clients that have it. You can't have multiple windows open because it's browser based. I just hate it.
So just buy the book.
Mhm. Yeah, until they force you to the online edition. See, eBay has it for $147. That's because 15's about ready to come out. That's why you're getting it cheaper. Now's the time to buy. Buy 14 because 15's coming out. Yes. If you go to Key Bank, you get it for free?
Yeah, I get it for free.
I love you. Yeah, what now? And it's it's pro?
I think it varies by like customer selection. I mean, they just give it to you for free if you have enough money, whatnot.
Oh, well, how much money you have to have there?
25. I mean, wait, it's not that much. You know, yeah. I mean, you know, if you're saving it, doing the CDs, and some personal stuff, so you just do it that way. So I think it's.
I think the IRS should give it to you for free, but. All right, so this is an invoice. And remember, it books a receivable, right? Which means then follow your arrow. You have to receive a payment against it. What we look at next is on page 54 is let's not do this step. Let's eliminate these two steps because that's two steps. I send the invoice out. I wait for the payment to come in. Well, if you're standing in front of me and paying me at the same time, I don't need to do this and create a payment. I just do this. This looks almost the same, and it takes two steps and makes it one. Here what's going to happen is you're going to increase your sales and increase your checking account or wherever you deposit it. And again, you're going to decrease your inventory and record the cost of goods sold if you're selling inventory. So you've just eliminated the accounts receivable process because you don't need it. They're paying you right now. That's what a sales receipt is. So you see that on page 54. So if I pick up this customer, black. This is using a different template, as you'll notice. You can enter your check number right here because this person's paying you right now. And how did they pay you? Maybe they paid you with a credit card, American Express. You're still going to can pick up the same item. You're still accessing the same inventory list. All right? I would say I'd fix this because, there we go. All right, so what's going to happen then? Notice how it says process the American Express payment when saving. Because they want you to use their credit card processing system, right? So if you are using it, you could do that when you save it. You could run it right then. Otherwise, you don't mark that option. All right, so here we're going to have $2.42. Where's it going to be? Right here. Notice how this went.
What does that say? I can't find
Oh, I'm sorry.
it. I can't read it.
Record deposits. I know it is kind of blurry, huh? Sorry.
Just hold for me.
So it says record deposits. So when we do an invoice and we receive a payment, it goes to record deposits. When we create a sales receipt, it goes to record a deposit. Remember I talked about the undeposited funds option last night? Now you don't have to use record deposit if you turn that feature off. But like I said, I wouldn't recommend it if you have multiple deposits on the same day because you'll never be able to do a bank reconciliation because it went in the bank as one amount. Not necessarily if it's a credit card, it's probably going to go one, each one's going to be individual. But if it isn't, you know, if you're taking deposits to the bank, you want it to be that amount on the deposit ticket. Somebody asked me last night, I think you did, right? Memorizing invoices? Was it you? Somebody did. Page 55 shows you that you can memorize your invoices, make them recurring. So I can do that a couple of ways. I can actually go back in, and let's pretend that I entered this invoice. And as I enter it, I go to list. Well, that's my memorize. Hold on. Sure. Or edit, memorize the invoice. See that? So this invoice, it says replace it. We'll say add. When I memorize it, here's my options. I can add it to my reminder list and tell it to come up when I open QuickBooks, and then I'll just enter it. I can say automatically record the transaction. This is my time frame. This is the next date. So if I say weekly, all right, then it's going to come up and remind me to do it because you're going to need to print it. So you're probably going to want it to remind you to do it. But the transaction's there. The date will go in as today's date. It'll be incremented. All you have to do is say record it and print it
And send it to you.
or email it.
So
Okay.
it won't automatically do it. So when you do this,
You can, if you did that little batch print thing, it should, when it's on here, if you had this marked or this marked, then it would come with that on there and you can go do the batch. Remember the batch?
So every month.
Mm-hmm. All right? Yes.
Do they have a template for, I'm a consultant, so I'm billing out on time and materials, so I have an hourly rate, but then I'm also charging them for materials used and so forth. Would that be a service invoice?
Yes.
So you can put not only consultant hours, but also.
Yeah. Mm-hmm. Remember, it's all going to be on what item do you pick as to whether it comes up as service. Notice, here's a service item, installation. Whereas this one is an inventory item. Do you see when I pull this up, it tells me what kind of item it is? So you can put it on any template. It doesn't matter. You could have it as, you know, the template I'm using right now. What it's depending on is what type of item is it. Here it's a service item. Here it's an inventory part item. Here's the non-inventory part item. So in your instance, it may be a non-inventory part item because you don't buy the items and stick them on the shelf like a retailer. You're buying it just for that job. You don't really want to track your inventory. All right? And this is, you know, $35 an hour or whatever the unit is. So if you did 5 hours of service to install it, that's what it's come up as, $35, $175.
Do you do it per job instead of per hour?
It's whatever price you put it in there. So if you put it in per job, then you'll know each time you'd enter 1 as your quantity. Right? All right, so once you've memorized a sale or memorized any transaction, you go to list, memorize transaction list, and here they all are. You can open it up. This is a bill, so I could open up this, and there's the transaction. And I can save it if I just wanted to do this one and print it out and save it. But I didn't have to key anything in. It's always the same. This is used with things that are generally always the same. A lot of times I see it where people have rental properties and they maybe want to send out a rent invoice because the rent doesn't change. Maybe it changes every so often when the lease renews. Or I often see it with expenses for recurring bills like you pay rent. For those, in my system, I just tell it to automatically enter it. I know it's going to be the same every month. I don't want to deal with it. Just record it. So when you open up your software, it'll say, all these transactions are ready to post. Do you want to post them? Say, yep. And then it's done. So you just saved yourself all that work. Any questions? Okay. Now let's look at page 56 where we record a credit memo. Clients or customers return things. And you issue them a credit. See right there, it's this little icon hanging all by itself. So in this particular one, I'm picking up Kreider's something. I can't even read that. Critter? It's not even on here. I like that. There you go. Somehow I must have hit enter there. So in this particular, we're returning sprinkler. One of them. This one obviously doesn't have a price back in the item. Now, what's going to happen when we do this? QuickBooks is going to increase your inventory. It's going to increase the amount and the quantity by 1. It's going to reduce your sales. It's going to reduce the receivables. What if this is a damaged sprinkler head? I just said that I added one back to my sprinkler head quantity, but it's really not one that's available for sale. Well, you got to do 2 steps, all right? Because Peachtree has the option that says, is the item, you want to return the item to inventory or not? This doesn't. It automatically goes back into inventory. Well, we'll see here when we get into the purchasing cycle that we'll need to adjust our inventory. So it's 2 steps. If you're returning an item and the item is damaged, can't be resold, you'll issue the credit memo to the client or the customer, and then you'll go adjust your inventory. Move it down for that item that can't be resold. All right, so if you don't use the use credit, notice I have use credit to apply to an invoice or use credit to give a refund. If you forget to do one of those, then on page 57, you will be prompted to do it. So don't worry so much about that. You'll be prompted to do it. So I'll say, use credit to apply to invoice. Great, it has no open invoices. Use credit to give a refund, and right there it can come right out of your checking account. All right? You could write them a check. Any questions?
What about credits back to their credit card? If someone pays you on their credit card and then they return something?
You have to call back the credit. You have to tell that to the credit card company. So I would do use credit to issue a refund, but I'd actually just make it like EFT. I would never print the check. But you're still going to have to call the credit card company or whatever you have to do to
So
do
they
that.
still do this?
You still got to do this because you got to get it in the system. You know, issuing the credit to the credit card company is external to you.
That's one thing.
You got to get it in here.
How about, this is, I'm sure I'm not in the right place here, but if I'm returning a product because it was damaged. then
You're the buy.
it's
We're going to look at that on the purchasing side. Yeah. Any questions? Okay. Recording customer payments, page 58. That's the receive payment icon. Again, you can't receive payment unless there's an invoice here. So here I'm receiving payment from Adams. And the amount. Remember we had that auto apply or auto select. Remember those options in the preferences last night I showed you? If we click these, it'll automatically fill in the amount, or we can enter the amount and it'll automatically pick the invoice being paid. So if I enter $6.55, notice that it paid all of this one because it's the earlier invoice number, and then it paid 48 cents of this invoice. You can change the way it applies by unchecking these and say, look, I'd rather you do it that way. All right? But that was that auto apply feature and auto select feature that I showed you last night. This customer also has credits that are available of 60 cents. You can apply those credits. And where's my little button? Maybe it's telling me, because usually you can apply that. There we go. They moved the button in this version. Used to be down here. Discounts and credits. So if there is a credit, there's 60 cents, they say. You know, where are you applying it to? Right there. Notice I have to click, unclick, and the credit's been applied. All right? If this customer, they made a mistake and they left, you know, what, 60 cents owed or 70 cents owed, if you want to write that off at this point, it's easiest to do it right now by saying write off the extra amount. You can either leave this as an underpayment or write it off right now. On page 59, I've tried to explain, yes,
On the, let's say that you get a discount of, 5% if they pay within 50 days. But you actually invoice, let's say you invoice them $100 and they pay, is that called an underpayment? You just write that off?
that'd be called an overpayment. If you invoiced them $100, but you give them a discount, but they paid you $100,
No, they paid you 95, but the invoice said 100.
That's an underpayment.
So
You can write it off, or you could leave it on there and re-invoice them. Like, I have customers sometimes miss by 3 cents. I'm not going to invoice them for 3 cents. The discount should show up when you're doing it. If you've got the discount built into the customer correctly, back on the customer account, let's say 1%, 10 days, and you did the invoice date right, and you recorded the payment correctly, like don't leave the payment laying there for a couple days, then record it, then the discount should have already calculated in there when you say receive payment. It'll automatically come up and go off on that.
So the payment, the invoice would show $95 instead of $100.
The invoice will show $100.
So you add.
When you do the payment, it would show $95 as your cash and $5 as discounts. The system will automatically do that for you if you've got everything in there correctly.
It understands the credit terms.
It understands the credit terms, and it looks at those dates. It looks at the invoice date and the date you're entering the payment and calculates those 10 days. That's why those dates are critical. Yes? If you offered a coupon, you'd probably put that on your invoice, wouldn't you? Then when you, no, when you, okay, so you don't invoice them, so how do they do it? But you still got to record the transaction, so you would do that on the sales receipt. So I would you would set up an inventory item. I know it sounds weird. You would set up an item that would be coupons, and then you would enter a negative amount. So you'd put you always want to leave the item you're selling at its full cost, but then you would select coupon from your item list and whatever it is, and have that post to your discounts account. So you can track those. Huh? Well, no, I don't think it matters. Well, it matters for your taxes because you're only getting, let's say it's $100, you're only getting $95, but it also tells you something. How much are you giving away in coupons? Which is important business information. Yeah.
You're gonna have different types of coupons. You should have a coupon.
Yeah, you could have different kinds of coupons. Right. But you want to be able to track these things so that you know what is it you're giving up as a business owner. Is it really worth it? All right.
Let me ask you about dates. So if you're doing this according to, is this program automatically knowing today's date? But what if,
But it looks at the date on the transaction. It doesn't, yeah.
So if you're recording today, but it's last week's,
You got to change the date to last week, to the date you got it. You always got to make sure those dates are the date that you want the transaction to post. All right?
But your audit will show that you did that.
No, because you're doing it on the transaction. The audit only shows when you go in and change the transaction, it's been saved. Yeah. All right, look at page 59. And here I've tried to give you an explanation of what happens when you save something. So look, sales invoices, they'll increase the balance in your accounts receivable and increase the balance in your sales account. Sales receipts will increase the balance in your checking account and increase the balance in your sales account. But note, regardless of whether it is a sales invoice or a sales receipt, when you are selling inventory items, then it will also decrease the balance in your inventory and increase the balance in your cost of goods sold account. So you can kind of understand what's going on behind the keys. All right? So whether you're using a sales invoice or a sales receipt, that little note in the italics applies to when you're selling merchandise inventory.
so cost of goods sold means not the cost to you,
Yes, it means your expense.
your expense.
Remember, QuickBooks is tracking every time you buy inventory. It's tracking that cost using the average cost. And then it expenses it based on the number of items sold. That's only for inventory part items. For other items, well, with a service item, what's your cost of goods sold? Your labor. With non-inventory items, you're not tracking them in inventory. So the cost of goods sold gets booked when you pay the vendor for the item that you bought. I went and bought a rhododendron, non-inventory. I pay that vendor. That's cost of goods sold. Yes. Okay. Yes.
The issue I have with the cost of goods sold is we'll have multiple jobs, and we'll buy from one vendor, but it's got to split between the jobs. Sometimes that's hard to do.
Yes, because you are unique manufacturing. All right, but you're still, when you buy from that vendor, you have a quantity and a price.
So, yes and no. Sometimes they'll charge a basic or price just to do the job, and then it will be either by quantity, by pound. It just depends. If it's, heat treating, still by pound.
But heat treating is a service,
But there's,
and labor is your cost of goods sold there, your employees' wages. All right, raw materials is an inventory. And if you buy 40 bars of steel, then you enter 40 bars of steel at their cost. And then as you pull steel out for that, that's going to go into it. But you need to be, see, your difficulty is you need to be doing assemblies because you're actually got raw materials and then you've got finished good. You're selling the finished good. You need to say, my inventory item is assembly, is a finished good. What are the raw materials, the other inventory items that go into that assembly? Because you're selling an assembly item.
right, well, the problem that we have is if we try to separate individual purchase orders and break it up, the vendor charges us more. So we try to give them consecutive numbers that are very short, that they can list all of them together.
Yeah, but see, you're looking at it wrong. You're buying on a per customer basis, but that's not what you're doing. You shouldn't be buying on a per customer basis. You're billing on a per customer basis, but you're buying the part regardless of who it goes to. You're making this item. And the components that go into it, the raw materials, could go to any customer. It's when you bill that customer, what's the assembly item? They took 10 units of this, 5 units of service. That's your assembly.
Right, well, I guess what I'm getting at is, with the cost going out, sometimes we incur fees, whether it's shipping added onto it.
Then you add that onto the invoice when you ship it out. That's a separate line item.
But my question is, sometimes it's for multiple jobs, there's that one fee, so how are we differentiating that?
What one fee? The shipping out? Or the shipping in?
From vendors.
The shipping in?
Right.
You can just add it on. Say I got 50 items and add it on to the cost, divide it by 50 items. So the cost of the item, you take the total invoice and divide it by 50 items. And that's the cost of that. Okay? All right, so let's look at page 60. 60 and 61 give you your correcting transactions. And I pretty much covered them and how you find the transactions. Notice how we find it on the Customer Center. We can use either the Customer and Jobs tab, or we can use the Transaction tab, whichever, if you know who the customer is, go there, the Customer and Jobs tab. If you're looking for a specific transaction, like an invoice number, go to the Transaction tab. Open it up and fix it. Sales cycle reports. Again, those are going to be in the report center. It always amazes me how long it takes the report center to open up. Sure, they're in the report center. All right, so here are your categories. If you customize a report, you then memorize it, and it will be listed underneath here. You can also take reports and make them favorites. This contributed is kind of nice because it's where end users have created reports that they like. They've customized the reports, and they're out there, and you can sometimes go out and download some other ones. So let's go to the standard reports, and if we go to sales, the sales section, this will tell us sales by customer. This is the summary. This is the detail. Pending sales, all right? So you can see all the kinds of, sales by items. How many items do you sell? What do you sell the most of? If you've got a customer who's buying a lot from you, maybe you do offer them a special discount term to get them to pay quicker. All right? You also want to look at customer and receivables. So these two things go together because they're all a part of your sales cycle. This is your aging report. This is where you see what people owe you. Again, this is as of December 15th. My total receivables are $36,000. Well, if I go and I run a general ledger report for December 15th, the balance in my accounts receivable should say $36,000, the same number. That's what we're talking about reconciling. The numbers should match. If you want to customize a report, that's this option right there. So you can add filters. You could go in and select, of course this is all accounts receivable. You could go in and just pick certain accounts, certain customers. All right, notice that I can scroll through all of those. Bless you. Bless you. These are filters. Notice that this is looking, by default, this says give me the status of open, like they're not paid. Give me all customers and jobs as of today's date. This just customize your header, what you want it to say on the header, and the footer, or the fonts. You can email these reports. You can take them as an Excel spreadsheet. You can send them as a PDF. If you take something to an Excel spreadsheet, I'm going to create a new spreadsheet. Of course, you need to have Excel on your computer. And I'll say, under the Advanced tab, I always tell it to remove the space between the columns. Otherwise, it gives you this and a tiny little column, and this and a tiny little column. And I say, give me the report, the heading on the report, so I can see it in Excel, not just when I print the Excel thing. I want to see it at the top. I also will tell it, don't include the QuickBooks export guide, because it gives you an extra worksheet in there. It tells you about the export. Well, I've already done it. I don't really need it. So once I do this and I export it, it opens in Excel, and you can do whatever else you want to do. So it may not be applicable in this particular situation, but there are lots of times that you may want to get things out of here in an Excel spreadsheet. I will export people's profit and loss in their balance sheet so that when I do their taxes, I have that worksheet where I maybe have to make some adjustments and I tie it into their return. That's my work papers. So I just export that stuff out of here. All right? So on page 65, it shows you how you can customize your reports, change what columns appear, change the sort order. Page 67 talks about emailing and exporting your reports. And then we come to customer statements. remember, invoice is just going to be that particular transaction. What a statement is a summary of all the invoices and any payments that have been made. So you may want to generate these at least once a month to remind your customers to pay you. All right, so you go to statements and enter the statement day. So here we have statements right there. And you can say, I want to do it for one customer, all customers. I want it to show a month worth of transactions. And then you can generate these. You can email them or you can print and send them. So it's going to show you, well, let's see what one looks like. Let me pick one customer. So there's going to show you all the invoices and the payments that went against it, and then their outstanding balance. Yes?
But if you're just sending them a monthly bill where it's one amount per month, you wouldn't really do this.
If they pay every month, but what if they don't pay that bill?
Then I'll just look at my Uncle Joe.
Uncle Joe. My Uncle Tony.
No, but, you know what I'm saying, so this is kind of used as more, if they have a lot of detail.
Well, it's used as more if they have outstanding invoices. That way you don't have to go back and find the exact invoice they didn't pay you on. You give them a statement that shows them everything. All right?
After that, you email them every day.
Yeah.
That invoice that they haven't paid because it's free.
Or hope they call you back and need something, because then they'll always say, oh, I'll say, you owe me some money. Oh, I'll send that check. Okay.
I got Uncle Joe.
All right, that concludes the sales cycle. So now let's look at the purchasing cycle. That's lesson 4. So we brought our money in, and now we're going to send it out.
Yeah.
All right. Again, in this cycle, you manage your vendor accounts, place orders for inventory, record vendor bills. We're going to go through all that. We've already looked at our managing our vendors. We did that last night. So let's go right into the actual transaction processing. Purchase order. You may or may not use these. I would say if you're not buying inventory items, I probably wouldn't use it because it's just a big hassle. All right? If you're using inventory, these purchase orders can factor into when you're selling stuff to customers. So when you go to sell something in QuickBooks to a customer and there's not enough inventory, it'll come up and tell you, all right? But it'll also tell you if you have something on a purchase order. So that way you'll know, hey, I can go ahead and maybe sell this. I may not be able to ship it today because I got to wait for this purchase order to be filled, all right? But at least you'll know that. So if you're dealing with inventory, purchase orders might be good. Purchase orders do not post entries to your accounts because no transaction, accounting transaction, has occurred. For an accounting transaction to occur, the goods must come in. Right now, all you've got is an order that you sent maybe to the vendor, and you're waiting for the goods to come. So this is really a database function, just so you'll know you have stuff on order. So if I pick the vendor, here I have who? Gusman's Nurseries. And I order plants and trees, okay. I order some, well, I don't want to order those because they're not inventory. Not a good example, huh? Let's order some, all we really have are some hoses. Let's order a pump. I'll order 30 pumps. And I'm going to order something else, just so you'll see. 25 bags of soil. All right, so I've got this purchase order here. So that's Gusman's. Now, when that stuff comes in, all right, It may come in with an invoice, or it may come in with a packing slip. If someone's really efficient, it's going to come in with the invoice, right? Because I'm going to turn my cash flow around quickly. So when the inventory comes, you say receive inventory. Excuse me, I clicked too quick. You either receive it with the bill or you receive it without the bill. Why would you want to receive it without the bill? Because you've got the goods. You can now sell them. Doesn't matter you haven't paid for them yet. You got the stuff sitting here. And you can now sell it to customers. But QuickBooks doesn't know that until you receive the inventory. So you need to get those received as quick as possible. So I'm going to say I'm going to receive it without the bill because they didn't send me the bill with it. And I'm going to go to that Gusman's. And it says, hey, you got some open purchase orders. Do you want to receive against one of them? Yes. And here there's 2 of them out there already. So I'm going to say it's this purchase order. Okay. And now it came over and it's the citrus trees. All right. Under the reference number, you're going to enter the packing slip. Because look what this says. Received items, bill to follow. They just give me a packing slip. I got the items, but I need it in my inventory as soon as possible so I can sell it. I now can sell it. So I'll give it a packing slip. I'll say receipt and whatever the number is on there, blah, 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 blah. Now, if you didn't get all of them, you can change the quantity that you got. As soon as I save this, it's now in my inventory. I cannot pay this vendor for these items. You can only pay them once you have a bill. But you can sell the items because you've got them. Now let's go back to Gusman and get the other one. This time we're going to receive it with a bill. Looks the same. The only thing is that the memo, well, let's do Gusman's. Notice purchase order 12 is still out there because I didn't receive all the items on it. Remember, I only received 4 of the 5, so that purchase order is still sitting there waiting for that other item. I'm going to receive this one, and this is a bill. So here, you can actually pay the vendor after you record this bill. But again, it's going to put those items into inventory so you can sell them.
So, if you, like, when I order supplies, I do it over the phone with a credit card, and I'm paying it right then.
What kind of supplies?
I'm an artist, so I order,
But is it something you would inventory?
yes.
Okay. So you would go ahead and just enter a bill. You don't need to do this step.
Oh,
Or you could actually go write a check.
okay. But then how do I record my?
On write a check, do you see the items tab?
Ah, okay.
There's expenses and
There's a
items.
back.
Items interface with inventory.
Okay,
All right?
okay,
You don't need to do all this stuff.
okay, good.
I lost my window. Hold on a minute. I'm not multitasking today. Yeah, go ahead.
So, your service industry, you would really use purchase order, I used to use purchase order for time.
No.
How would you keep track of someone's time?
You use the time tracking feature, remember, under preferences? And under employees, you would enter your time. Okay? All right, so I still have that purchase order out there to Gusman's, and now the bill came. I got to get the bill in here before I can pay him. Hence, we have this. With the second Gusman's bill, it went all the way down here. It's ready to pay. This intermediate step is needed when you receive an item without a bill. Now you got to go back because you got the bill. And you do Gusman's. And there is, see my funky little numbers there? That's it. That's the item. Now when I select it, I'm going to change this to the invoice number, whatever it is. And maybe the date's different, because they're not real efficient. They ship me the items and then they send me an invoice dated a different date. Remember, it's all about cash. They give me 30 days to pay. They send the invoice 10 days later. It's dated 10 days later. I got 30 more days. They're out of money 40 days. They gave up inventory and they're waiting 40 days to get the cash. And they wonder why they're out of business, right? So you don't have to do anything down here unless they put some extra shipping on there that you weren't aware of on your purchase order. You would enter that on the expenses tab. All right? Yes.
What if you have to prepay?
Again, that's a good one. Because you don't want to record the inventory. Because you don't have it yet. You're prepaying for that inventory. So, I don't think on the purchase order it allows you to do that. And if you go down here and enter it like she was saying, we would put it as write checks. Those items aren't there yet.
What if it was a charge?
What?
A charge instead of a check?
It could be a charge or a check. If you go to enter a charge, again, you still got items tabs, you got expense tabs. But the problem he's paying for it, but the items aren't really there to sell.
What if they don't put any items on there and just put the amount of what you're purchasing, so you have it recorded, and then when the items come in.
I think that might be what I would do, and then you'd have to go back in as extra
Fill in the
entry.
items.
How often do you do that? Because QuickBooks doesn't really accommodate that.
Okay, back here, they're all the time every week.
Hmm?
Back here, they're all the time every week doing that.
You are? That's a pain.
Companies are getting first.
It's usually a day or two later.
Yes.
I have a question. On the purchase order form where there's a little comment for vendors, if you put something in there that says, purchase order is not allowed to exceed the amount on this without our previous approval, and then, let's say your subcontractor comes back and says, I ran into an extra expense
Too
and we
bad.
have to repaint this, we don't have to pay the extra. We're only, because
As
we
long
have
as
that
it's
on
on
there.
there, it's a contract.
That's contract.
Excellent, okay.
That made her day. Uncle Joe likes it right now.
I would do it in bold.
Yeah. This big,
Mm-hmm. That's what the Uniform Commercial Code means
okay,
in a commercial transaction. That purchase order is a legal contract.
okay.
All right? Any questions on that? Sorry, I can't fix your problem.
Did they do a journal entry?
Nope. Journal entries are for very unusual transactions. That's all you ever want to use them for.
Now, if they put the amount in there, like in a check, if they put the amount without any details on there, will that then take it out of the checking account?
He'd have to go back, he could put that in there, he'd have to go back and void the transaction, and then go put it in when he gets the
But
inventory.
at least he'd have something that reminds him, I paid for that.
Mm-hmm, mm-hmm. You could set up an account that says prepayments to, all right, customer prepayments, and that way you would know those transactions in there, and you could look at that account and monitor it.
Chart of accounts, new account.
Yeah, and it would be, yeah, it'd be an asset, because you prepaid for inventory you don't have yet.
It's sort of an expense.
But it's an asset till you get the inventory, because you're going to go back in then and void the transaction and put it into your inventory. So you just don't want to be putting stuff in your inventory when you don't have it yet. Because you'll think you can sell something and you don't have it. All right?
I need somebody to write the book.
Yeah, I know. They can't get that
Sounds like
sophisticated.
selling us stuff instead, help us.
All right, so 72 just went over what I just did. 73, Goes over when I just showed you between the receive inventory and enter bills against inventory. And I did those scenarios, so that's 74 and 75. Now let's say, and 76 we went over. Let's say you have a bill, and these are for the people. Please don't use this if you're not paying your bills with those checks that you buy and you put them in the printer. Because I had this poor client come in here and I go, oh my gosh, when I show you what you were doing and how you caused yourself all this extra work and you didn't need to, you're going to be so unhappy. Because they were going through and putting all the bills in and then paying all the bills when all they were really doing is paying the bill at the time with the check. So we could just do write checks and do the same thing. So, but if you are putting checks, check stock, in a printer and printing multiple bills at once, then you will use this, enter bills for expenses. And then you'll use that last step that says pay bills. Yes. No, you can buy them deluxe, you can buy them anywhere. No, I'm saying if you are like in the old days, I always say in the old days because I don't think people do this anymore. They may do them at big companies, but most small businesses, we don't do this anymore. You used to sit there and enter in like 20 bills. And then you'd say, I want to just print the checks for all those bills at once. That's when you use this. All right? But if you're like me, I hardly ever write a check. There's times you have to write a check. All right? Like if I need to mail something into the Secretary of State, or I need to mail something to the court with a check. Then I'll write a check. But I use the write checks feature. I don't need to enter the bill and print a check. I can do it all as one transaction right there. I can print this check right out of write checks because I'm only doing one. I'm not doing multiple ones simultaneously. But for those of you that are doing multiple checks simultaneously, this is where you enter bills for those non-inventory things like rent, utilities, insurance. You go in here and you enter all the bills. Or let's say that you purchased inventory, you got a bill, and you didn't use the PO system. Because remember, the PO system's up here. Well, then you use the item tab here. This is for things that interact with the inventory. And this is for all your other expenses, like rent, insurance, whatever. Hey, pizza's here, guys. You want some pizza? Pauline, let us know when you want them to come and get their pizza. Thank you so much. After you enter all these bills, then, and again, let's pick a vendor. Cal, gas, and electric. Notice how this came up as utilities and electric, and why did it do that? Because remember on the vendor account the other day what I showed you? Vendor, this is Cal, gas, and electric. See that? You set the default account. So now you don't have to go look it up all the time. And what does that do? It cuts down on errors. We all make errors, right? So it automatically defaulted to that account because that's where these bills go. Once you enter the amount here, oh my gosh. I make my personal preferences, I don't have to enter the decimal point. All right? Now, what reference number would you use? You might say December 17 electric. That's December of 2017's electric bill. All right?
If you have utilities automatically taken out of your bank account,
Yeah.
how do you reconcile that to this system?
what you would do is you would set up recurring entries, memorize transactions, and then you would tell it to remind you, and you would go, when it reminds you, you double click and open that transaction and enter, change the amount, because of course the amount varies. All right? Yes.
I know this seems really stupid, but.
No, nothing's stupid.
You're going to write check, and you're not really actually writing a check physically.
You just save and close it. You don't
It's
print it.
just taking it out of
Mhm.
your account, so it keeps you.
Yep.
Basically doing your ledger.
Yes.
That's all. It's not really physically printing.
Nope.
Okay.
It's only printing the check when you tell it to print, using the print button.
So if I wanted to keep a register for my personal checking account in the system, I could just do that
Yes.
and just, I don't have.
Yes.
Yeah.
Okay? You had a question?
Well, I think like you, I don't physically write checks, I go to my bank and I pay it. Do I then sort of duplicate what I just did on here, so it's in my QuickBooks?
Yeah, but you don't do this feature. You go down here and just write a check.
You're not really writing a check.
No, right there I put EFT.
Keeping track of the same.
I say EFT, and let's say I'm paying that electric bill, or I'm paying my telephone bill. It's automatically taken out.
And then it puts it in your ledger, and that way.
Yeah. It's in there. So when you go to do a bank reconciliation, it's going to show up on your bank reconciliation. You don't use a check number because you didn't do a check number. You did an electronic funds transfer. All right? And these kind of things, if they recur, like I have things automatically come out of my bank. Like she does. My rent, what do I care? I don't want to go have to pay those things. It's wasting my time. So QuickBooks comes up and tells me, hey, your rent, it's time for your rent. So you just go pick it and record it. So, but if you do use that system, you would then do the paying bills that shows on page 79. I know I've skipped 78, but let's look at 79. Right here, when I click that pay bills icon, all right, it's right there. It's at the end of the arrows. I can then pick what I want to pay. If I don't want to pay the full amount, like say Connor Garden, oh, you're only getting 200. Then I change it right there. All right, so down here it shows how much I've selected to pay, $377. It then says to be printed. It's going to be printed on a check. It's going to come out of this bank account, and I then say pay the selected bills. And I put the check stock in my printer, and I print them all, and then I mail them. I just wasted 40-some cents. How much is postage? 49. I give 48 cents. You know why? I use stamps.com. They give me a penny off. But who wants to waste 40-some cents? That's why I just let the bank mail it. Right? Sometimes they do. It depends on who you're paying. They actually, have you ever gotten those checks like that? I've gotten bank processing checks where clients pay me out there, and they're going in and keying it in, and then the bank sends me the check. All right, any questions on that part? Most of you are not going to use this because I don't think we do that kind of transaction in today's day and age. Most things are done right on the bank account. We're using the right checks feature.
Imagine in 10 years, people don't even know what checks are.
I know.
You barely can sign their name.
That's okay. You want to read a good book? Read The Creature of Jekyll Island, and it tells you about how the group of bankers created the Federal Reserve so that the banks will never lose. All right, look at page 78. This is where someone asked me earlier, I think you did, where I returned something, and that's on page 78. There is no separate icon for that. You just go right into Enter Bills, and to me it's kind of a thing that would be very hard to find because I'd be looking everywhere for that. Do you see that little button there? Now all of a sudden that turns that into a credit. And if you're returning items, you do it here. if it's a credit for just a regular expense, you do it there. So I mean, you could spend a long time trying to find that. Page 81 goes over that write checks feature. I think we've kind of done that. Page 82 goes over correcting transactions. Once you record a bill against a vendor receipt, the receipt goes away. So don't spend time looking for it, because it took the receipt and made it a bill. Page 83 goes through correcting transactions. Again, it's the same thing. Fix it the way you put it in. And these are pretty much step by step. I mean, I've captured the screens. I've given you the menu commands. Setting up your tax rates and your agencies, we kind of looked at that last night. Remember, it's under your item list. You set up your sales taxes. Paying your sales tax. Now remember, in our preferences, we said we pay sales tax on the accrual basis, right? I showed you that last night. I also showed you last night how you set up the taxing agencies under your item list. Now this is where we go to pay it. Manage your sales tax. This will open up your preferences right there. Remember, this is the preferences window. It's actually showing you that as of the invoice date. This will show you, it'll prepare a report so that you can see your sales tax liability. This is as of November 30th. So I owe $2,078. Here's where you go to pay your sales tax. Whoops. Guess I didn't know that much. Thought I did. Let's go from another date. When you want to pay it, you click, click, click. Now, in Ohio, if you pay early, you get a discount, right? Everybody know about that? No. Oh. First of all, you do your sales tax through Ohio Business Gateway, correct?
Yeah.
And if you pay, I think it's like before the 18th of the month, you get a discount for paying early. So what you would do then to enter that discount, my sales tax here is $544. And if I got a discount, I would say adjust and enter that, reduce my sales tax by whatever that discount is, and then your adjustment account could be whatever account you want it to be, other income, so that it will pay your invoice. It'll pay the sales tax that you really owe, but it'll give you that discount because you want it to match in the system. So that's how you enter that discount that Ohio will give you. Because you're reducing, you're getting money. You're getting to keep some of that sales tax if you really think about it.
So you're calling it income.
It is income. It's really interest income or whatever you want to call it. It's income. Because you collected the sales tax from the customer and you're getting to keep some of it if you pay early.
What kind of percent early?
I don't know. I've seen it as high as like $4 or $5. I mean, it adds up. All right. And then you're doing it online, so what are you going to put here? EFT. You make sure it doesn't say to be printed, because you're not going to print it. And you're all done after you save it.
Where do you check EFT? I'm sorry.
It was at the beginning, and you don't check it. You just take the check number out.
You put EFT.
And you put EFT, because it always has to be paid online.
But where do you put the information to transfer that,
It already did it when you recorded that transaction. It took it out of your bank account. It reduced the liability account and it reduced your checking account. All right, 88 and 89 and 90 are some of the purchasing cycle reports that you'd want to monitor. If you see yourself buying a lot from a vendor, maybe you go to them for discount terms. Maybe you say, hey, man, I'm buying a lot of stuff from you. If I buy it all at once, blah, 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 will you give me early payment terms or give me a better price? Page 91, for those of you that do inventory. Now, I can go to the report center. I can actually go to the vendors and look at my reports. But I don't think that under reports, vendors. All right, so here is my physical inventory worksheet.
I'm sorry, where did you find that?
Under reports, inventory, or it tells you in here on the book, or you can go to the report center and look for it. Just because QuickBooks keeps track of the quantities of inventory doesn't mean it's accurate. Maybe you did something wrong. Maybe somebody returned something. You forgot to reduce the inventory because you didn't actually put the thing back in inventory. So at least once a year, you should do an inventory count. If you have somebody else counting for you, you need to go in and remove this column. Otherwise, what do you think if you have 5,000 screws in the bin they're going to do? 5,000? Yep. All right, so you'd want to remove that column. So you go to customize the report, and you take off quantity on hand so they wouldn't know. Now you get a true count. All right? Huh? But if they came back with a big variance, you'd make them go recount it. Because then you're going to take this count sheet, and you're going to go compare it to your inventory and enter any discrepancies. Look at page 92. '92 is where you adjust your inventory items. Over here, you see inventory activities. Adjust quantity and value on hand. So notice the adjustment type. Either you're adjusting the quantity or the value or both. Some businesses, you have lower cost or market. You have to write down stuff. Most of us, we don't care about that because we don't publish financial statements. We're not audited. So we don't have to adhere to those accounting principles. But maybe you do. Maybe items have been impaired. Items have lost their value. You're selling electronic parts that once were worth this and now they're worth this because technology is always changing. So maybe you will do a write-down of the value.
You mean that garage full of 8-track players I have probably is?
No, they might be worth something because people want to collect that stuff. Notice how they're going back to record players and records. Ask my husband about his records I threw away. I never hear the end of that. Okay. Like, what are you going to play them on? I threw away. So when you go and you get an item, remember how I told you if somebody returns something and you don't put it back in to be resold, this is where you write that down. So if they return that pump and your system says there's 92 on hand, but there's actually 91, that's how you write it down. This is going to take it to the cost of goods sold account, but some of you may want to post it to an inventory variance account. So you track that separately to know how much you're losing. Now, if you're a small business and it's just you and a couple people, you don't have a lot of problems. But you know, the bigger you get, the less control don't know everything going on. So if you start seeing big variations in inventory, you may have some issues like theft or people not doing their job. They're not invoicing customers for inventory going out the door. So you want to watch those things. Does anybody have any final questions before we move past purchasing?
Does it handle when you say buy a lot, put something in and you sell it?
That would be your assembly. That's what we were talking about with her. Your raw material is bottle and whatever it is you put in it. Hopefully it's a nice, that's what I was going to say. I was trying to find a better way to say it. Because they got me taping me on here. Like, ew, yeah, give me some of that whiskey.
So is that true of all food items then? Anything
If you got to think about these are raw materials. Coffee and the cup, they're all raw materials that go in to make an assembly, a cup of coffee. You're selling the cup of coffee that took multiple items to go into the cup of coffee.
Like I was talking about, you can take one or seamstress.
Yes.
I've got one.
You got materials and, yeah. All right? Buttons. Yeah, you should see assembly items on there. Do they have it? Does it have it in QuickBooks Pro? Ooh, it used to. Let me see. Doesn't have it.
maybe if you,
No, they want you to buy the higher edition.
but isn't there like, when you were checking, the original type of business producing a
Can't you
product
just
or
add new
something?
and then add your own?
It works much better with assemblies. And it used to be in QuickBooks Pro. Uh-huh, go back and see, because I know it used to be in there.
This is QuickBooks Pro
Uh-huh.
2014?
This is 13. 14 wouldn't be any different. You know, they're always going to try to find a way to upsell. They sell manufacturing edition, you know, nonprofit edition, yeah. All right, now let's look at working with bank and credit card account. Do you want some pizza first?
Yeah.
All right, go get some pizza. You get 2 seconds. Run. Pauline, you want to pass some around? Pass the box? Are there? Oh, yes.
Never own what I sell. Okay? Never own it. I call you, I need 150 baseball caps. Because my customer.
And don't inventory.
I don't. You told me the last time to use sales receipt.
Yes.
Not invoice.
Yes.
Okay? I call you on the telephone, I order 150 caps. Do I go in here and put a purchase order in?
No, you don't need to. Why create yourself all that extra problem?
I receive them. I don't even receive it. All I receive is money.
Right, that's what I'm saying. So just record, you do with a credit card?
I will pay my vendor with a credit card.
Then you'll do what we're gonna do here in a minute, enter your credit card charge, and that's it, you're done. It would go to cost of goods sold. You don't need to do all that other stuff, because you're doing specifically drop ship.
Correct, but I then need to invoice you,
Then you go do the invoice. That's a separate transaction.
and that won't mess up that I don't have.
You could do it as a non-inventory part.
Everything I have is
Right,
included
that's what I'm
as a
saying.
non-inventory
Right,
part.
right.
And it's cost of goods sold here and
Cost of goods
sales
sold will be
income
booked Cost of goods sold will be booked at the time you do your credit card charge.
Right, when you enter it, there's a little box, so now you've got the cost one, and that's cost of goods sold. You've got the income one, that's sales income.
That's it, you're
Other
done.
than that, I don't have too
No, you
much
don't have to do
going
that
on.
other stuff, no. You're done.
If I pay a bill,
Mm-hmm.
sorry, if I pay a bill from my online bank,
You use
you
write
still
checks.
want me to go in and write check.
Yeah, you have to. How's it gonna get in there? It doesn't go from your online bank into your system.
Really?
No, I wouldn't do it because I know people did it and it blew up on them. I know somebody
everything
imported
I
all
do
these
over
bank
here
transactions and blew up their whole,
Online, I've got to go in here.
yes,
and
yes,
do.
yes.
Okay,
Yeah,
so
because
if
it
I
doesn't
go to the
jump from
ATM
there.
And take out $20, do I have to put
Yes.
that in there?
Yeah, because how's it gonna get from there into there?
Okay, what if I take a business trip to the East Coast and I fill my tank with $50?
We'll talk about that later. That's not, there's two ways to do your travel, and that, you just don't take your gas.
So I'm starting a business and I've spent $1,500 so far in expenses. I haven't sold anything yet. You know, just
Yeah,
kind of getting
you can still
started.
deduct it.
Right, but do I enter that in
QuickBooks.
just?
And it came, and you put the money in, right?
So I put a deposit in.
And that is debit your checking account and credit your equity, because you
Okay.
made a capital contribution
Okay,
of that money.
okay,
And then just start writing the checks as your expenses,
okay,
all right?
okay, thanks.
Last year, we did a project for a company, and they didn't pay us. And then when we made a payment, they refused. We took it to court. We settled it. After went in court, they did that. Their claims, they were trying to say that, you know, for some reason, we didn't perform, which was not true. Long story short, we agreed to divorce from now. Immediately see the payments that went to this attorney, their attorney, our attorney. We didn't start using those payments until this year, in February. Problem was, there's journal entries done as bad debt. We took out the bad debt and we waited till we got this to settle. And then I was taking the money and putting it in as, just as, if you wanna
First of all, are you a cash basis taxpayer?
yeah, I only.
Then you don't
received-
have bad debt. There is no such thing. Cash basis taxpayers don't have bad debt, because you never take it into income until you get the cash. Only accrual basis taxpayers have bad debt. So I would get rid of that journal entry. And then what you would do is when they paid you, I would go to their invoice and I would enter the amount they paid you with the attorney fees on it, because the attorney probably took their fees out of it. But they actually paid you the full amount. So you would put that full amount that had the attorney fees in it, and then you would write off the rest of the invoice. Right when I showed you, you can write it off right then. Then as a separate transaction, you enter the attorney fees.
What my accountant did, he said is that he put it as when you're first in cash, that's how we were dealing with receiving it, but as far as how we're set up. When me and my friend sold the company, as work, he changed the price, put as
Oh, I would never do that.
I'm sorry.
So then you did have bad debt.
Yeah, but the problem is it stayed under journal entry, and I think we have to get that off.
Yeah, you do.
So, I'm
I
trying
reverse it back off, and then do exactly what I told you. When you get the payment in, write off the rest of the invoice to bad debt, and then record the attorney fees separate. All right?
Okay, thank you.
You're welcome.
I appreciate it.
You're welcome. Did everybody get their pizza?
Did you get some?
Oh, I don't want any. Thank you.
Just ask, books or which edition would be like most suitable to like a restaurant, coffee shop business? Or is it
If you want to do that assembly, you're going to have to get something higher.
Higher than
QuickBooks Pro, there's QuickBooks Premium.
Is the see, this was one thing you went over yesterday, like to pick your type of. you
Yeah,
were
but it's
using
still
the-
not giving us the, it wouldn't
Is that
matter.
right?
Mhm.
So there isn't like a restaurant, food service.
There is, I
Oh,
think
there
they
is?
do have that.
Oh, okay.
You might want to look, I think they
Yeah,
do.
I have to look
Yeah.
before I decide.
Yeah. All right, yeah. Uh-huh.
Is there a place to go to find out what services are taxable and what aren't?
Yes, the Ohio Revised Code.
That's very daunting.
It is very daunting.
I work for an interior design firm, and
Uh-huh.
so I'm trying to figure out what things are taxable and what.
If you do have a question, you can call the Ohio Tax Department, the sales tax line, and they'll, and question them, give them full amount and question them. I always go to the Ohio Revised Code and read it. Yeah, it is daunting. It's a circular reference. All right, we're going to now look at our banking and credit card transactions. So starting on page 94 and 95. So if you transfer money between accounts, say you transfer from savings to a checking, they've got a feature for that. All right. And you go to banking transfer funds. All right. And so you simply pick the account. Right now it's coming from checking, and where is it going to? So if you ever do that, you can enter it that way. Yeah, no, it could be from bank to bank. I mean, it just depends on where you're doing it from. Remember, you need everything to appear on your bank statement, so when you go to reconcile it, it's all there. So now we look at reconciling bank accounts. Huh?
It's more fun than a human being should be allowed to have.
All right, so here's my checking account. Only certain types of accounts can be reconciled. So your credit cards be reconciled, your bank account. So I'm going to reconcile this checking account. Of course, I don't know what the balance is. I'm making it up. If you have any service charges, enter them here. That way it'll post the journal entry for you. If you get interest on your account, put it here. It'll automatically put it in for you. All right, then you hit continue. And in here, I always say hide transactions after the statement date. And then you're just going to click, click, click. Here's all your deposits and credits. Here's all your checks and payments. And then this must be 0 before it will reconcile. If you're having difficulty, or let's say it's a bad day like today, I started to do a tax return and I never did get to it. Because everybody calls and wants something in an hour. So you'll say leave, and then you can come back to it. It will not let you reconcile it till it's reconciled. It has to be reconciled in order to hit the reconcile button. So again, this must be 0 to use reconcile. Now I have clicked my ending, I've accidentally put the wrong amount in here before, you know, in that first window. So you can always go modify to go back to the first window and fix that. Or I left off the service charge or whatever accidentally. Okay? Any questions on that? Let's say if we're going to use our credit card. Page 99. We can reconcile that credit card account, which is nice. So after I'm done entering all my credit card charges, and here's where you enter refunds and credits or purchases. So I enter them. You know, my son's an accountant, and he throws all of his credit card charges away. I go, how do you do that? I have to match everything. It's an OCD thing. I don't know. But I'll tell you, one time we went on vacation, and I only used a credit card one time. I took everybody out to dinner one time. And I came back, and all of a sudden, I was buying an online English speaking class. So I always match everything. But this is where you enter those charges individually so you can get them into the account that they go into. If it's a meal, if it's office supplies, all right? If it's items of inventory, it goes there. Once you're done entering all those things, you get your statement, you reconcile it. Here's a credit card. I don't have, do I have anything on it? Nope. Here, let's try this one. All right, so I reconcile it. I can enter any finance charges. I don't have anything in here, but once you're done and you reconcile it, it'll come up and say, do you want to write a check now? And you can then write your check. If you don't pay, it'll come up with the full amount of the bill, and if you don't, you just reduce the check amount. I don't know about you, but I pay my credit cards online. So you would again say EFT. Yes.
Can you scan your receipts and then it'll go in there automatically for you?
No.
Not yet?
No.
Sure it's coming.
For a fee. That's right. Everything's for a fee.
I actually know a site that actually does that. It's something else. It's like scanned it.
Yeah, but will it give you a file that can be imported into QuickBooks?
Not a QuickBooks, but like another document. I'm sure you can actually put this in.
If you can do an IIF file, an IIF, QuickBooks easily imports IIF files.
IIF?
Uh-huh. Like I use paychecks for my payroll because I'm not about to do payroll. It's too much time. And then QuickBooks will create me a general ledger file after each pay period, and I just import it. And it goes right in there.
I'll put that, your fresh total
Yeah.
also, that quick scan thing.
So now we're done, and we're going to look at closing the accounting period. We pretty much, what are the steps that you should do when you close your month? Again, we want to go through this process every month because it's much easier than waiting for January, or in my client's case, October. Yeah. No, you know, corporate extensions are due September 15th, so I'm calling them like the Friday before, and I'm like, guys, if you think I'm working over Saturday and Sunday because you couldn't get your act together, you're wrong. So you better have your stuff here. It comes miraculously. But you want to go through, and I gave you on page 104 a pre-closing checklist. The kind of things you want to look at and reconcile and make sure you're okay. You, of course, do your bank reconciliation, review any pending transactions, post any adjusting entries. Adjusting entries are the proper thing to use for journal entries. Like you want to post depreciation. You took a loan from a bank. Those are proper, you know, adjusting entries. You shouldn't be recording transactions of day-to-day transactions as journal entries. They should be going in through one of the windows that we've looked at. Page 105 gives you an example of doing a journal entry. I kind of showed you that yesterday when we did our opening balances. And our financial statements, we kind of went through all of those yesterday. And I showed you setting that closing date. Because once you're done with a month and you've reconciled it, you don't want to accidentally post back to it. And it is easy to do. I've even done it myself. All right? So, I mean, it's just very easy to enter that wrong date in. Does anybody have any questions on this? Yes.
During business startup, let's say that I want to do some training, and, you know, training a $500 class or whatever, or currently I want to take clients out, taking them for a weekend playing golf. Where would that go under
Meals and entertainment.
entertainment?
Yeah. Let's talk about that a minute, because this is going to be my 5-minute, hopefully 5-minute, way to what is the hottest item for an IRS auditor to look at. It's called the low-hanging fruit, because they're always going to find something wrong. Meals and entertainment must have a receipt Must. Don't say it got burned up in the fire. Don't say it went through the flood. They don't care. You don't get it. That receipt must say your business purpose. Write down who you took and why you did it. All right, that's number one, audit. Number two, auto. Most people do it wrong.
Please do tell, 'cause I just did a whole bunch of auto.
There's two ways to do auto. Number one is called actual expense. And number two is called the standard mileage rate. You can't commingle them. It's one or the other. Whichever one's higher, you get to take. Actual expense. If you lease your car, you add up all the lease payments for the year. If you have a car payment, you add up all the interest payment for the year, and you look at the value of the car, you're going to depreciate it. You track all your gasoline, your oil changes, your insurance, your repairs and maintenance, your licenses. That's your actual expense total. Now, how much did you use that car for business? People always think they can get out of tracking a mileage log, and you cannot. You must have a mileage log. You must show your business mileage, your purpose, the date, the description of what you did in the mileage. Compare that total mileage to the whole mileage on the car for the whole year. So you got to know your whole mileage on the car for the whole year. And then take the percentage. So you take the business miles divided by the total miles, and that percentage, let's say it's 40%, that's what gets applied against your actual expenses. You don't get 100% of your actual expenses, you get the business use of it. 40% in this case. Or you can just take the standard mileage rate, which is 56.5 cents this year. Take your total business miles times 56.5 cents, and you are done.
You don't do your.
Is it 56? Maybe I'm wrong. Is it 55? I thought it was 56.5. Whatever, it changes every year. Yeah, what?
You don't get your lease payment, you just get your.
Nope.
Or the other.
You get actual expense or standard rate. You'll always get your tolls. That's separate. You either get actual expense or standard mileage rate. Why are they giving you 56 cents? They're saying because that factors in gasoline, repairs and maintenance and all that stuff. But you better have a log. Because as soon as they give you the IDR, which is the information document request, I will always tell you what's on there. I want to see your bank statements because they're going to add up all your deposits, and everything in that deposit column is income unless you can prove otherwise. And then I'm going to ask for your travel log, your auto log, and then I'm going to ask for your meals and entertainment receipt. Those are the three top items. Yes.
So for the mind log, can you put it in your calendar, like when I leave somewhere?
Yeah, as long as you have it, that's fine. As long as you
Like,
can
I won't
produce
have
it.
on an actual log.
No, it doesn't have to be like a log. If you can go back and show them, and yeah, I do write this down. Now, what have I done to people when we get an audit? I go, you better go back and you better find one real quick. All right? Go back to what you did in your life 3 years ago, because it's usually 3 years ago, and find some way, because if you can't produce it, you get nothing. Yes? No, you have to keep your auto expense separate because, again, you're only going to get the business use of that. You don't get the personal use on it. So if you only use your car 40% for business, you only get 40% of that insurance. If you have a car that's strictly for business and you have auto use policies that say you cannot use this car for personal purposes, then you can take it all. You don't actually have to track the mileage if you have a business car that you strictly have employee policy that you cannot use it for personal use. Now you've just thrown everything out. You have a policy that says this car can only be used for business. Now you get to take everything, but most people don't have that. I would still do it under auto and separate it. Yeah, you're getting it. You would get 100%, but I would still track it as auto. Uh-huh. Any other questions? Huh? Yes. Okay, then I would just leave it as one. I wouldn't go breaking it out. Yeah. The other thing is if you're a corporation, S Corp or C Corp, and you're going to say that that company owns the car, well, the title better be in the company name. I've seen that mess up too. So they'll throw it out. And, you know, it causes big problems when you're a corporation and you've improperly done your auto. Because now it's probably dividends back to the owners of the corporation. The disallowed amount will be called a constructive dividend. All right, that's it, guys. Thank you. Thanks.